Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, who is the founder and editor of Traders Corner. Garth, welcome.
Hi, Juliet.
Garth, firstly, just a quick point on the US elections. Voters are going to the polls today. To some extent, even though this is a huge event, it's kind of been a non-event for the markets because markets are just waiting to see what the outcome is.
Yes.
And is that really what's kept trade fairly subdued for the last few days?
Yeah, very much so, because this is one of the, probably the most closely fought election that we've seen ever in the US. So it's quite exciting from that perspective. But of course the market is sort of marking time, waiting for the result one way or the other. So it'll be very interesting to see once we know the results what the market decides to do. What I will say, I have no idea obviously which way it's going to go, but historically, if you go back and you look at elections in previous US elections, the market typically does stage a little bit of a rally once the result is known. And I don't know, maybe you can say that it's that American patriotism or something like that. But it does appear as if the markets do generally move up a bit once the election result is known. And I guess you could also say it'll also then remove the uncertainty.
Well, yeah, it's like a little mini certainty rally.
Exactly. That's it.
So
we'll watch. I still think that the bias is for further upside in global markets at the moment, but obviously we'll see once we have the election result out.
Okay, well, we'll be talking, taking a look at our own top 40 index and a new trade this week, but let's just revisit two recent trades that you have open still, as I understand. The first is PPC. How's that working out?
Yeah, PPC.
Slow but steady.
Slow but steady, yes, yeah. Yeah, it's working out for us. If you have a look at the chart that's up on the screen at the moment, I'll show you why I like this and why we've done the trade. The first thing is that we have this large inverted head and shoulders pattern evident, which you can see labeled there on the chart. That to me is the dominant feature of this chart, and that it signifies a large bottoming pattern in my eyes. What you typically do is you take the height of that head and you project it up, in this case, to get your target price, which in this case is 32 Rand. And I'm still confident that we are going to go there. It's just taking a bit of time to get there. Also, what we had was an upward trend going back to the July lows. If you can see, it joins all the low points over the last couple of months. And then we also had this little falling wedge pattern within the uptrend. And these wedge patterns, when you find them within an uptrend, typically they are bullish continuation patterns, and they usually break out in the direction of the prevailing trend. And that's exactly what has happened over here. So we bought, for our portfolio, we bought at 28 Rand 70, and we've got a stop loss at 27 Rand 10. So I'm still happy. If you have a look, the last week or two we've had a bit more consolidation, but we're still holding above the upward trend. We're still holding that 50-day moving average as a support line, and I am still confident that we will probably go and see our 32 Rand target achieved at some stage.
They are actually coming out with results next week. I don't know if they've put out a trading update as yet, but that could be one of the reasons why it might draw more attention from the market.
It could certainly draw a bit of attention to itself once those results are out.
Yeah. Let's hope that trading update for your sake is good.
Let's hope so.
Okay, so that's still open and you're happy to stick with it. What about Sasol, which is the most recent trade?
Yes, we did Sasol last week, and it's also been it's grinding a little bit. It's not really moving up, but it's not moving lower either. The chart of it is also up on the screen at the moment. So what we had here was, first of all, that lower trend line is basically an upward trend. You can see how it joins all the low points over the last 4 months or so. And then we've also got an upper trend line at the top there which joins all the high points. So this stock is narrowing into a bit of a triangle type of pattern. My view was that we could buy it off the bottom of that support line, which came in at 307. The support was actually about 366, which held, and then we ended up buying it at 371 Rand 20, and I'm using a stop loss as a break below 365 Rand, and the target here is 384, which is more or less the top, that resistance trend line at the top. So I'm not looking for a massive amount of upside here. I'm just looking for a little bit of a bounce. And at this stage, I'm still happy. Those other two arrows indicated on the stochastic oscillator there just point out that we had what's known as bullish reverse divergence on this trade. It's where the stochastic makes a lower low, yet the share price makes a higher low, and basically indicates that the shares are more oversold on this current pullback than they were on the previous pullback, and typically that is quite a bullish setup. So yeah,
so while
I'm
this
happy.
trade, yeah, it hasn't sort of bounded out of the gates,
No.
but you're happy to stick with it.
I'm happy to stick with it for the time being. We've got our stop loss in place. If it happens to get hit, we'll obviously exit the trade. But for the moment, it is still working, and it's within the boundaries of what we set out. So let's stick with it and see what happens.
Garth, then that takes us to, I suppose, an overall look at the market. And we've had a couple of questions actually coming through asking your opinion on what is going on in the top 40 index. So tell us what you see there.
Yes, well, we've had a look at this chart a couple of times over recent weeks, and it's really doing well. You can see a nice steady rising trend there, higher highs and higher lows. So what I see here is a nice rising channel, and you can see how the stock bounces off the top and bottom of that channel on various occasions. What I also did identify here about 3 weeks ago, or maybe a bit more, was that we had this small little ascending triangle within that upward trend, and you can see it identified there by the dotted lines. And at that stage, what I'd said was that you take the height of that triangle at its broadest point, and then you project it up by the amount of the by that distance. And at that stage, I said 33,500 was the target, but we've reached that level now, and I think there's actually still possibility we could go a little bit higher here. I've got 33,700 as a target there now, which you can see indicated, and it would also tie in with the top of that channel. So I think we could still see a bit more upside. I wouldn't be chasing it right now in the short term because it is quite overbought. We have had quite a strong rally, but certainly the momentum is up, and definitely you don't want to be shorting this right now.
Okay. So you don't want to short it, but if you were a top 40 trader or you traded the index, maybe you might have missed the boat somewhat.
Yeah, I wouldn't be chasing it here. I think that if you start chasing it now, your risk to reward ratio is just not very good. So I would not be chasing it. I'd probably rather wait for the next round of consolidation and then make a decision from there.
Okay, so that's sort of the bigger picture. Narrowing it down to this week's trades, Old Mutual, interesting one.
Yes, yeah, I'm having a look at Old Mutual here. Again, if you look at that chart, it's a very, very healthy looking chart. It's this nice, steady, rising trend. You can see there that uptrend basically joins all the low points over the last 5 or 6 months or so. And we've come back recently to test that trend line. You can see also at the top there we've got a little bit of an overhead resistance area, which comes in at about 24.75. So what I see there is that this is potentially mapping out a bit of an ascending triangle type of structure as well on Old Mutual. So we've got support there at 23.70 rand. Also, what's interesting to note here is once again we've got this concept of bullish reverse divergence happening, where the stochastic is making a lower low. In other words, it's more oversold now than it was on the previous pullbacks, yet the share price is at a higher level. So now that is typically a very bullish setup, and it does usually result in quite an aggressive move in the direction of the trend. So, yeah, a couple of reasons why I like this one here. We have bought at 23.90 rand over the last couple of days. I've set a stop loss at 23.40 rand. And then if we just look for a target, the first target I think will be that overhead resistance line at 24.75 rand. That'll be our first target. But if that ascending triangle is validated on a break above 24.75, then what you do is you take the height of that triangle, as I've got it there indicated by the arrow, and then you project it up from where the breakout would occur. And in this case it gives us a target of about 26.50 rand or thereabouts. So I'll probably be happy to take profits at 26 in this case and not be greedy. But that gives us a nice decent risk to reward ratio with this trade, and you can see it indicated there by the red and green blocks that I always use. So the red block indicates the difference from where we enter the trade to where our stop loss would trigger, and the green block indicates from where we've entered the trade to where our possible target is. And you can see there's a nice healthy risk to reward ratio on this trade indicated by those red and green blocks.
Okay, so you have entered into this trade. Can you take us through the mechanics in some greater detail?
Sure. All right, so we've bought it at 23.90 rand as I mentioned. The stop loss is 23.40 rand. So what that means is that risk per share is 50 cents in this case. I'm risking 1.5% of our account only on this occasion. Bear in mind we normally risk 2% of our capital on most trades, but in this case I'm going to be a little bit conservative and I'm risking 1.5%, mainly because we've got other trades open, and also it's just a way of managing the overall portfolio risk as well.
I suppose, and we'll get to that in a moment, but when it is up so nicely for the year, you don't kind of want anything to
Yep.
dent the gains you've made.
Yeah, sure. I want to obviously try and hold on to the profits as much as we possibly can as we enter the final straight now. But so we're risking 6,060 Rand of our capital, so which is 1.5% of our account as things stand at the moment. I take the risk, or the portfolio risk, 6,060 Rand, and I divide it by the risk per share. And that gives us the number of shares that we can afford to buy, or in this case the number of CFDs. So it's 12,120 shares. So for simplicity's sake, I'm going to round it down, and I've traded 12,000 CFDs for our portfolio this week. That's what I've done for this week's trade. And then the target, as I mentioned, is up to possibly 26 Rand. And therefore our risk to reward ratio is 1 to 6.2, which is a very, very healthy risk to reward ratio on this trade. That's obviously assuming that we can get to 26 Rand, which I don't know at this stage, but my analysis suggests that it's possible, and if that is possible, then a 6 to 1 risk reward ratio is possible here.
Guys, just going back to the stop loss, it's quite a tight stop loss, isn't it? If you bought at 23 Rand 90 and you set it at 23 Rand 40, is there any particular reason behind that?
Yeah, look, it's really based off the technicals. So we haven't been below 23 Rand 65 on this stock recently in this current pullback. And my feeling is that we're now quite oversold and we're starting to move up off that support level. If we were to see the stock down at 23 Rand 40, where the stop loss is, it would definitely mean we've broken that upward trend that I'd identified, and we would have broken below the recent low points. And then I might have to then concede that something was wrong with my analysis. So that's the reason it does work out as a fairly tight stop loss. But that's also what's really great about this, is that it therefore enhances our risk to reward ratio, because it is quite a tight stop loss.
There's also a bit of a theme going on here if you've got Old Mutual and Sasol trades open, and that is a Rand hedge theme, isn't it?
It is slightly, and my view is that the Rand does still remain vulnerable to further weakness. Subscribers to traderscorner.co.za will have seen some analysis on the Rand dollar exchange rate over the last week, and there we talked about the fact that it does look as if the Rand is now vulnerable to another bout of weakness before the end of the year. So with that in mind, we've done Sasol, we've done Old Mutual. I've done both of those trades on their own individual technical merits. But I guess it does play into the hands of the fact that I have a slightly bearish view on the Rand at the moment.
But it's interesting, actually, what's happened to the Rand subsequent to your fantastic trade on it when it blew out to 9 to the dollar. It's actually been quite steady, even though it's weakened, or it's been weaker than it has in the first 6 months of the year. It really hasn't done very much, the holdings sort of to the 860, 870 level. It
is. You see, the thing is, what our view is doing, I think it's consolidating within its weakening trend. The breakthrough 8 Rand 55 on the Rand was a very bearish break, and it's now basically put us into a new trading range on the Rand. So I think whilst we're staying above 8 Rand 55, the bias remains bearish, and I think the Rand does still remain vulnerable to further weakness whilst that is the case.
Certainly, it was a great trade, and I keep mentioning it because it was very opportune indeed. Garth, and that, I suppose, takes us to what the portfolio looks at. It looks very healthy, I have to say.
Yeah, it's looking good. So this is another new high for our portfolio. We're sitting just short of 405,000 Rand, so up basically to 62% for the year to date. You can see the trades that we've got open there: Old Mutual, Sasol, PPC, which we've discussed on the show today, and then I've got an option structure in the background, which is likely to expire pretty much worthless, I think.
So you are making quite a nice mark-to-market profit on the PPC trade at this point.
Yes, the PPC trade has come roaring back for us over the last couple of days. It's quite volatile. I mean, some days that we see nice mark-to-market profit on that trade, and other days it gives back some of those profits. But by and large, it's heading in the right direction, and I'm quite happy to stick with it.
Okay, fingers crossed for a positive trading update. And Garth, to end off with, what are your upcoming course dates?
All right, these are 2 more courses that I'll be running this year. The 24th of November is in Johannesburg. I've got 5 seats available still for that course, so anyone that's interested in attending can get in touch with me. Also in Cape Town on the 1st of December. So anyone who wants to attend one of these courses is welcome to get in touch. They can email me on garth@traderscorner.co.za, or alternatively you'll find me on Twitter and on Facebook.
Okay, great. We'll leave it there. Garth, we'll see you next week. Thanks as always for joining us.
Thanks.
That's Garth McKenzie, the founder and editor of Traders Corner.